Hello everyone, welcome to the Bitcoin pricing model analysis for Brave New Coin. I'm your host Carl, lead trader and portfolio manager at Techemy Capital. Quick disclaimer, this video does not constitute financial advice and is intended for educational purpose only. Well, guys, I've been meaning to put up a Bitcoin pricing model update since Friday, but the kids and the family kept me super busy. And hey, it was also Father's Day too. And to that, happy Father's Day to all dads watching this video right now. Before we dive into it, it's worth mentioning that last week was very eventful in crypto land, with several mass liquidations of hedge funds such as 3AC and insolvency claims, withdrawal freezing of several DeFi lenders such as Celsius and Babel, who are on the verge of bankruptcy. On top of that, over the weekend, we saw some bad players take advantage of the low volume on exchanges by pushing Bitcoin and Ethereum down to 18 and 17Ks and $900 respectively for both Bitcoin and Ethereum. Now, the biggest question on everyone's mind, is this the final bottom or did we capitulate? I'll make sure to answer that at the end of this analysis, so stay tuned. Anyways, let's overview the Bitcoin pricing models. Remember that those models do not account unprecedented global macros. Sure, you can say that Bitcoin experienced COVID crash and the quantitative easing in the past 2 years, but on the other hand, it did not experience a great recession or aggressive rate hikes something unseen since like the past 2-3 decades. All right, let's have a look at the market cycle models. Let's start with the 200 weekly moving average. So this method uses a color heat map based on the percent increase of the 200 weekly moving average. We've reviewed that together before. And as you see now, told you guys, let's wait to get to 22Ks. And that's typically hitting the 200 weekly MA would typically in the past 10 years give us the bottom. In this case, I had an order there of 15%. It got hit at 22Ks. We surely fell under it. We should not stay longer below it or start moving lower. Otherwise, this model may be in trouble. It might be breaking soon. And that could happen due to the global macros. But if you want to ignore the global macros, this model is working as intended right now. So if you bought here, started scaling in at 22Ks. Remember I said we had another leg down this from 28Ks. So we've seen it happening now, and we went actually even lower. And I said at least 22Ks. So we hit pretty much 17Ks as a low. So if you bought there, or you bought 18.4Ks, which actually I had an order of 10% there. And we also bought for the Techemy fund, hedge fund that I'm managing, fully in at 18,400. So yeah, it's a good metrics if you go by the standard, the previous standard of this model established in the last 10 years. We should have a bottom. Now, if the macros are super bad, we may likely not hold this model and we might break down further. So we'll see what happens, okay? Let's look at the 2-year MA multiplier. Okay, this model also, this one highlights periods where buying or selling Bitcoin would produce amazing returns. So every time it was above the red ribbon here for an extended time, we marked the top. In the past decade, that Bitcoin had boom and bust cycles. Right, so if you look in 2018, 20Ks as well. So any time it goes above that red ribbon in that red area, that was the top. That was a great area to scale out. And every time there was a bottom in the bear market, in the past bear markets, you see here it's in green. It marks a great opportunity to buy for insane profit later on. You could sell at the top. Now, in this case, yes, we started going in this capitulation zone. And that said, this indicator doesn't tell you how low it can go, but it tells you it's a great opportunity right now to buy Bitcoin. So yes, I mean, based on the previous standard, it looks like this indicator is giving us the green light to start dollar cost averaging in. We should have already done that. And I would say take it easy, and it's going to take several months to get that bottom confirmed, whether it's here or lower. So yeah. So let's look at the Bitcoin rainbow price chart. This chart overlays rainbow color bands on top of the log growth curve channel to highlight market sentiment. As you see here, we are in the blue area, which is a fire sale, which is a great, amazing opportunity to buy at. Now, I've seen on Twitter, on social media, a lot of rainbow charts circulating around that are broken. So this one from lookintobitcoin.com, I don't know, might be different. So might be scaled in differently. So it hasn't broken yet. But again, the global macros hitting a great recession or stagflation, which we discussed before in previous videos, we could see this model fail. Now, still, this is a good area to start buying at, and you see the model has a bottom near 15,000. I think if you want to, if we're considering a bottom here, a final bottom, 18 to 16K is a great area to buy at. And scale in the next 3 to 5 months. So yeah, this is the area to buy at. If this model breaks, we go to the worst outcome, 12 to 9Ks, then that's a possibility as well. All right, let's look at the 1 year hold wave. Let's look at this indicator looks at the percentage of all Bitcoins that have not been moved from one wallet to another for at least 1 year. So looking at this indicator, you could notice some, like the red area here, this was the top, and you see here the holders started to sell on hold, or whatever you want to call it, their Bitcoins all the way down as we as they bank profit on the way up while Bitcoin went up. So in this case, yeah, at the bottom here, that was the bottom. Well, this was, sorry. So this was the top, and here at the bottom of as the holder sold, we reach a lower percent, roughly 42% of the holders going down from a significant 60% from 1 year holders to 42%. So that marked the top. And for the bottom here, seen in green, the bottom was marked when the holders started accumulating through the year, through the bear market. But you see here, there's a little twitch down, and we started going down. And that's where there was a capitulation. So some of the holders here were shaken out of their 1 year plus hold position. They probably sold down here a little bit. So we want to see something similar here. And if you notice, we didn't have a red here. We never reached that level. Or maybe we can debate it. Maybe it was reached, but it's not color on the chart here. But I would say May 2020 or April was similar to what we've seen in 2017 as a top, but just not illustrated here. And then you see here during the bear market, the holders started to hold again. And we're seeing again, it's kind of similar to 2018, those holders. Now we're seeing that little trend down on the holders here. What was that? 66% roughly. We're starting to trend a little bit down. So maybe we are seeing capitulation, but it still has some to go, maybe some weeks to go down. But it looks like we are in this capitulation territory looking at this hold wave indicator. Let's go towards the cycle top indicator. This indicator is very effective at spotting the market cycle high or all-time high to within 3 days. It can be seen by this orange dotted line, which called it pretty accurately for the past 10 years. So just to keep it, to to keep it simple, can we use this indicator to buy the bottom or near the bottom? Certainly, and I think that's one of the greatest indicators out there personally. You would want, if you don't want to risk it in right now, to go fully in, it's a great idea to buy Bitcoin when Bitcoin meets that that orange 111 moving average right here. So you see every time we hit it, it was a good opportunity to buy. Like in 2019, if I go back to 2015, we hit it a couple of times and it was a great opportunity to buy at. So this is definitely a good indicator. Yes, we are in a downtrend. It doesn't tell you, unfortunately, if where's the bottom, but we are in a capitulation kind of zone. Question if we go lower or not. That's the question that this cannot answer. But give it a few months, 3 to 5 months. I think once that moving average moves down and Bitcoin meets it, you should be able to start to call us dollar cost average in more. And that's what I would tend to do as well. Let's look at the fear and greed index. So people are currently, you can see from that indicator, it's not my favorite. People are super fearful and have been for quite a while, from 25 to 29Ks. And this indicator, by the way, is super laggy. You can see here, especially in the past 6 months, it's been in fear for a while. Sure, we had it called it great here, but it didn't call it great at 41K. So I've seen a lot of people on Twitter very cringy tweeting about this indicator. Oh, we are in fear 16. That was at 46Ks, and we are at 41Ks. It's fear. Buy, guys, buy in. They did this all the way down, and this indicator really screwed them over because it's super laggy, and you can stay in a downtrend for a long time and go lower, and this could still flag a lower fear number. Now it was helpful at 34, 32Ks, but and it was helpful a couple of times while we did some consolidation above those levels, but it was a terrible indicator at 29 or 25Ks. And a lot of people on Twitter and social media on TradingView was like, oh, this is the bottom, fears at 10, similar to, close enough to the COVID crash, and 3K 2018 bottom, which was at 11. I was actually skeptical here, and I said in my videos, I said there's another leg down. I don't trust this indicator. And surely enough, whoever bought it here, listened to everyone else, they got screwed. There was a $13,000 sell-off. I mean, altogether, this is a huge sell-off. So I can't really use this indicator. I would say don't use it on its own, at least. Use it in combination of TA. Use it in combination of other models that we are reviewing here before you're making an assumption. So right now, yes, it is in capitulation area, but how low can this capitulation be? Are we stopping here at the 18, 16Ks? Because it could have been at 29Ks, but look, we're still heading down. Can we go down another 10K to 12 or 9Ks? Surely we can with the bad macros if you want to consider them. So yeah, keep that in mind. But yeah, we are in capitulation zone, but how low can that capitulation zone go or be at? That's the question. That's it. Not a bad area here to buy some Bitcoin. Now next, let's go to the funding rates. So I'll keep it simple here and straight to the point. If funding rates are negative, typically that's what I would look for here, like we had in May 2021. That would mark a capitulation, or that we're in capitulation zone, as the short position would pay the longs, and then it would pay off too long. And then obviously that would mean that we would have bottomed, and most likely we have a higher probability to get longers to long, and people start to buy, and we trend up. Now, we've seen this on the March 2020 COVID crash as well. Look how much red there is, or negative funding there is, which marked the bottom. Unfortunately, we cannot see 2018 bottom at 3K. This indicator doesn't cover it. But if you look carefully here right now in June, there's nothing major here in the funding rates that is showing that we have capitulated, or the longs can start go crazy and longing. Yeah, so I don't think we've, this one does not indicate that we've bottomed or we've capitulated. So something to keep in mind. Um, let's look at the next indicator now. That's one of my favorite, the SOPR, the spend output profit ratio. This indicator looks at the investors selling for a loss and profit. Currently, it does not show that people are feeling the pain, or they are now in the negative and high negative profit and high negative loss. So in my opinion, this indicator actually has been quite good, but it's not showing in the past, like we currently, like we've seen in the past, that we are in capitulation. Actually, we only had it one time where it flagged a possible capitulation here back in the summer or May, June 2021. But you can see here, it's just not has shown any capitulation currently with that sell-off. If you look back at previous bear market bottoms, you can see that in 2018, when we hit 3Ks, it went down to almost 0.97 or 1 on the indicator itself. So we should get into 0.90 zone for us to see some kind of capitulation. It's not showing that. So I'm kind of cautious. Now, if both this indicator and then the previous one, the funding rates were both showing that we've capitulated, then great. I would increase my position from 20% to like maybe 30 or 40%. And if we didn't have the bad macros, God, I would increase my position to like 60, 80%. But I can't do that right now due to all these, what I've just spoke about. Anyways, so let's go to the mining models. Let me overview the Puel multiple here. This method looks at the Bitcoin miners and how much revenue they are making now versus the last 12 months. It is a great tool to spot cycle tops or bottoms. Now, the higher values seen here up in red, that range means that mining profitability is much higher to the yearly average. And miners will look to liquidate their holdings, which typically they have been really good at timing their sell to liquidate their holdings of Bitcoin right at the top. And we can see that in the past, in 2017 mega bull top and the 2013 mega bull at $1,000. Now recently we barely, when we had the top in May 2021 and the one at 69K, we really didn't reach that region. Looks like the miners just literally started selling at 60Ks or even 50Ks and above. So it clearly can be seen here. So we literally had a tiny hit of that area, but I think what we want to look for now here is how can we time to buy the bottom with this indicator. So the bottom value seen in green here, which we've entered finally since the last time we reviewed it, means, well, this bottom range means the cost of operation will be too high, and that's when miners will start to switch off their miners to reduce hashing powers. And that kind of in layman terms would equal to saying the miners are capitulating. But the problem is, yeah, sure, we hit that region here. It should mark the bottom. We are in the capitulation area on Bitcoin. Now, can it go lower or not is the question. That said, it's a good area to start buying at based on historical data and on the past 10 years. Now, again, this indicator has not really, or model has not really been in a great recession. So we don't know what happens from here. right? Can we stay longer in this area, capitulating? Does it mean that Bitcoin will go lower, or is this the bottom at 18, 17Ks, and we start rolling up from here and Bitcoin decouples from stocks? Or it's not clear. So we're gonna have to see what happens. Yeah. So let's look at the last model, the Bitcoin hash rate. Um, Bitcoin hash rate, just to give you an idea, is a security measurement of the Bitcoin mining process. The greater or the higher the levels of hashing power seen in orange here, that means the harder it would be to take over the network. And you see, obviously, it's through the years, it's just been more miners have been trying to mine Bitcoin. The hashing power has been going higher and higher and becoming more difficult. So the network is effectively more secure now than it was ever. Now, how do we use this indicator to time maybe the tops or bottom? Mainly right now what I'm reviewing is timing the bottom that we currently are looking for. If you notice that in 2018, when the Bitcoin hash rate dropped right here, we had a significant drop. And that's because the miners switched off their gears. Bitcoin capitulated and bottom at literally when it bought the hash rate bottom and was at the lowest, Bitcoin bottomed at 3Ks. And if you notice now, if you notice the current hash rate and the price action, the hash rate took a big beating here, similar to, if not worse than 2018, and the price dropped. And now it looks like it's trying to push, the hash rate's trying to push up. So that could mean, still a little early, but it could mean that this is the bottom at 18 or 17Ks, more or less. I think, in my opinion, as long as we don't go below 16,000, or we lose 16,000, then I think, yeah, based on this model, excluding the bad macros, we may be looking at the final bottom right here. So that's it, guys. Now heading into the conclusion you're all waiting for. Is the 18, 17K range the final bottom, or did we capitulate at that range? Well, based on all the 10 pricing models we just overviewed, overall, yes, we are in a capitulation territory, but it is not clear where exactly the bottom is in. Meaning, is it 18 or 16K, excluding the bad macros? Or due to the bad macros, could we see another sell-off in the next 3 to 5 months that would take us to the worst outcome of 12 to 9K? And that would, if we do get that, that would render some of the pricing models we overviewed today, some of them would be useless, or some will actually stay relevant. It just will stay longer in that lower range that we've seen. So it is worth mentioning that out of the 10 models also, 2 of them are not yet aligning or pointing to capitulation like the other, and that's the SOPR and the funding rates. For them to do so, to point to capitulation, we'd need another significant drop to 12 or 9K, or maybe lower. So ultimately, it all boils down to your own beliefs here, guys. Meaning, if you believe that global macros do not matter and that somehow Bitcoin will not be affected and actually will decouple from the stock market, although we have no indication currently of that. If you believe that the SP 500, NASDAQ, and Dow Jones have bottomed here at the current level, then yes, your decision is, yeah, hey, we likely bottom on Bitcoin, and the bottom is at 18 or 16Ks in this bear market. So if you go with that, then by all means, like, ladder in, just do it carefully. Now, if you're like me, you believe that Bitcoin is affected immensely by the bad macros, that we are in a recession, stagflation is coming, and the rate hikes are aggressively going to take crypto and equities markets more down, and that will stay correlated to the equities market. And we're going to see the DXY, or the US dollar, surging much higher. Then most likely this is not the final bottom on Bitcoin, and we have more downside to 12 or 9Ks by sometime by or before October, December 2022. So either way, guys, whatever your belief is, you're more than welcome to choose whatever your belief will suit you. Do your own research and pick one. Remember that we still have 3 to 5 months of accumulation or consolidation at the current or maybe lower levels if we drop in another drop in the next few months to 12 or 9K. Either way, let's say we stay at the current level. You still have plenty of time to scale in and dollars cost average and big. So don't rush it. That's what I can tell you. Please also do manage your risk carefully. Don't go fully in. If you're like 20, 30, 40% in Bitcoin right now from those lows, fine. Just make sure stay out of leverage. Trade and make sure just trade spot instead. Don't do leverage unless you know what you're doing. You don't want to get caught. And if you're doing leverage, do use a stop loss, tight stop loss. And remember to leave some dry powder or fiat just in case we go for the worst outcomes on Bitcoin or Ethereum. Okay. Anyways, that's it, guys. Please note that I'll be releasing a quick technical analysis update on Bitcoin and Ethereum on this YouTube channel or mine in the next couple of days to complement the conclusion we just discussed. I will also review an effective DCA strategy that I've shared on my Discord channel to help you ladder in with the lowest risk possible heading into this capitulation zone we're in and heading into Q4 and into next year, 2023. So make sure you subscribe to the Brave New Coin and Bitcoin Guru YouTube channels to get notified once I release them. Link to my YouTube, Twitter, and Discord channels can be found in the YouTube video description below. Take care and happy trading, guys. Peace out.